Now, here I want to zoom in with scenarios for fund managers who might be dealing with more funds. Say, for example, somebody is trying to look at $2 million recommendations, I mean, $2 million investments, spreading it over, say, I would say 8 days, just as an example, would probably need $250,000 investment per day. And if he is willing to spread the risk or put it into equal risk for $3,000 per stock, you're looking at 83 recommendations per day, 1750 recommendations a month. I would say 83 recommendations day may be possible, but it's very unlikely if somebody the stock markets the predictive model would qualify stocks more than 100 share stocks every day. So please keep that in mind, because it has got to do with the stocks getting qualified based on bull and bear market conditions. But if you have a bigger fund to play with, what you may want to do is you can increase the investment risk factor to say $5,000, and at the same time you can probably increase it to say $5 million. If I put it as $5 million, you're looking at around 125 recommendations per day, which could be a limit, which means roughly around 2625 recommendations a month, which will still give you around 22.92%, with roughly around 1.14 million as a profit if you go based on the target price. So if you notice, a huge chunk of the profit is basically from this section. What I'm trying to say is that when the market gets more bull, this percentage will go from 30 to even 50%. Usually it will be 40, but sometimes it can even be 50. But this scenario which we have here is for average market conditions, which has been shown. So for example, just to give you an idea about what is this all about, I would try and show you how this averages gets computed. And I think it is probably here. No, I'll try and show it's still working. What I want to do is to try and show my members or prospective fund managers that these numbers which you are seeing here, let me say trade details here. I've taken some trade details to give you an idea about what type of an ROI and what is the average duration for these. You'll notice that this is for September. I'm trying to show you that for September the average duration, which was around 4.4 days, which yield, this is this is not for target price, it was based on strategy based on automation, but just to give you an idea that you're looking at around 4.4 days type of a scenario or as an average. For October you are looking at around 2.29 as an average, so which means that this is what you're looking at here, in this range. Most of the stocks got qualified, but this is a very broader average of what type of investment turnaround you can expect. What could be the number of percentage of stocks which could be on float at any given point of time? What is the percentage of stocks which could settle within say 2 to 30 days time frame? What is the percentage of stocks which could settle within 0 to 1 day? So this is where the whole research is focused on in terms of getting a better ROI, which means that if these breakouts can happen faster, your one is able to rotate the funds faster, would get a better ROI. Not only to mention that this is one component of the research, and the second component of it is to I'm sure many of the fund managers would have automation. So based on the automation, what you can expect from us in the form of subscription would be that, okay, tell me which are the stocks which are having a breakout and what would be their potential target price. These are the two most important components. If your automation platform has the capability to suck that information in from this document, which is a Google document, you are all set when it comes to trading with automation. You may have your own automation, so I will not interfere or try to recommend anything new on that. But typically I use Interactive Brokers solutions, because most of the time these stocks which get recommended, say for example, if I'm talking about, let's put 5,000 here, which was aggressive number, say 111 shares. So even if I'm looking at probably 111 shares to trade, Interactive Broker would have probably only charged $2 or around $2 for a round trip commission. So commission is a very important component of ROI. So this research has been focused and in terms of maintaining not only recommendations with a high possibility of turnarounds within 1 to 2 days, but at the same time also looking into the scenario of, if I have to trade 125 shares per day, I want to also make sure that I am paying much less commission. And what is the solution? From our research point of view, it was Interactive Broker, whose round trip commissions for stocks below 200 shares were very low compared to other brokers. And secondly, they had an API through Quantopian where you can stick in these recommendations through automation, where you don't need to have any manual intervention. But I'm not getting into that. I will leave it to fund managers or wealth managers to discuss it out with me as to what is their best solution and in terms of how they would like to approach. But these are the type of recommendations, number of recommendations one can expect. So keeping the risk bare minimum, the most important thing is to rely on the breakout informations which is happening. So more is the breakout information, more is the potential for ROI. So we do a pretty healthy check on the market in terms of stocks we scan. I think probably around 1700 to 1800 stocks get scanned. Healthy stocks get scanned. Again, there are probably like more than 11 12,000 stocks symbols in a US stock exchange. But if you really look at it, from 11,000 stocks to bring it down to probably like 20 30 40 stocks which gets qualified is a lot of filtration criteria which goes behind it for this successful ROI. And I will try and show you in a real-time platform how this would look like, of course with a very small investments, which is from my end to demonstrate how successful this methodology, best practices along with the solutioning have been so far.